Intel Corporation is a favorite among value investors. You've seen a lot of big channels talk about Intel, but on this channel, I've been talking about why the top two chip makers that at least I will be including in my portfolio are NVIDIA and AMD. But of course, in this video, I'm going to round off my discussion on the chip makers by talking about Intel, a company that's been down over 50% year to date. And so let's get into it. But first, let me run the intro. What's up, guys, and welcome back to the channel. Of course, guys, smash that like button to satisfy the YouTube overlords. But let's get into this. So you can see that Intel is down over 50% year to date. And so some of you might be scratching your heads and saying, well, what exactly is causing that 52% decline year to date? Well, the major issue is that the PC total addressable market is expected to decline 10% in fiscal year 2022. So that's largely causing the decline in the share price for Intel, because Intel's largest segment is the PC market, where they serve chips for PCs and notebooks. And just to give you a little bit more of an understanding of their segments, this company is largely a two-segment business, where 50% of their revenues are from the personal PC market and 30% of the revenues come from the data center market. So that's the growth in the cloud business. I do love to see that, and that cloud business will continue to grow their revenues into the future. And I do believe that they're going to continue to lose market share to AMD in the PC market space. And here's what I mean. They have their Alder Lake, Raptor Lake, and Meteor Lake chips, but I don't believe that they can compete with AMD's Zen 4 and the recently announced 5 semiconductor manufacturing process using Taiwan Semiconductor's foundry. Intel is falling behind here and losing market share. Recall that I just explained that this is 50% of their overall revenue. So if you have a company where 50% of your overall revenues that are related to a product that are suboptimal to your nearest competitor and losing ground, that's a recipe for disaster in the future. And so the current numbers don't tell the story. And so you really got to be afraid of where Intel's results are going to be in the future if this continues. And so this is what I'm talking about, where AMD's partnership with the Taiwan Semiconductor Company has been monumental. They have just announced their new architecture for the Zen 4 chips, and they've announced that they're going to be creating the Zen 5 chip, further cementing their technology dominance over anything that Intel has to offer. And it's not like the consumer is not aware of this. Although Intel still leads the PC chip market, their 85% market share has been whittled down to approximately 60% market share over the past 10 years. And with the Zen 4 based on a 5 nanometer process and the Zen 5 coming out, it's a much larger leap ahead of Intel's Raptor Lake and Meteor Lake. Personally, I still see market share erosion to AMD over the next 10 years. So this is bad news for Intel. And, you know, they have some emerging business segments. They have their accelerated computing systems and graphics group, Mobileye, which I believe they just IPO'd, and of course they have their Intel services. And so they've made a big bet on becoming a foundry, and they're going to get government money for this. But in my opinion, I just think the industry is too competitive for one company to do it all. That's old school chip maker thinking. And so Taiwan Semiconductor is a foundry. And one thing that I do want to have you guys note is that it's not like Taiwan Semiconductor is just in China. They are building foundries in North America as well. So Intel does not have a sustainable competitive advantage over Taiwan Semi. In fact, their business model is archaic, and so I see more pain on the horizon for them. But once again, I might be wrong, and so I want you guys to tell me in the comment why I'm wrong. There's a lot of Intel bulls in the value investing community. I don't see why you would be a bull over Intel when AMD and NVIDIA are trading at such discounts to their intrinsic value. Now, although I modeled out Intel myself, I noticed that their outlook that they're providing to us is very reasonable based on where I'm modeling it. So I do like to see that. It tells me that I'm sort of thinking about the company correctly. And what am I thinking? Well, I'm forecasting a 16% revenue decline in fiscal year 2022 and a small increase thereafter of 5%. I forecasted margin expansion to 50% in fiscal year 2024, but I don't see it going back to the 55% just based on the technology investments being made over at AMD. I would believe that Intel would have to sacrifice margins to compete with the technology that AMD will be offering in the future. Now, notice on their cash flow statement, they're returning a ton of capital to shareholders with dividends and common stock buybacks. And so expect more of that to continue into the future. Now, the other thing that I do want to point out is that these guys are incredibly shareholder friendly. Notice that their stock-based compensation as a percentage of revenue has never gone above 3%. It's usually around 2.5%. So that's amazing. And when looking at the balance sheet, notice that they're having a bit of a swell of their short-term investments up to $24 billion. And so they did reduce buybacks in fiscal year 2021, but note that the capital ended up on the balance sheet as it did in 2020. And it's likely that they will either pay down debt or buy back more shares. But notice that when I calculate excess capital, they still have negative excess capital. And the reason why they have negative excess capital is because they have more debt than they have cash and short-term investments. But overall, the net debt picture is not a bad picture at all. So I just want to point that out. But remember that AMD is cash flush, and I also believe that NVIDIA is also cash flush. So in terms of debt, Intel has more debt than its competitors. Now, before I go into the valuation, I do want to remind you guys that 80% of the watch time on this channel is from people that are not subscribed to the channel. So please, if you have the opportunity, subscribe to the channel. Now, notice I'm using a 15 times multiple for Intel, which might be on the low end, but I'm using a low end multiple for all of them. And so I'm valuing the company at approximately $40 per share. And so compared to its current share price of $26 per share, the share price as a percentage of its intrinsic value is around 62%. But I do want to caution you guys, be careful. Intel has lost a ton of market share to AMD over the past 10 years, and AMD's technology is much better at the moment and getting even more competitive. So I'm not a buyer of Intel at any price, even if they get the lion's share of the government grants to build foundries. And so here's where I'm pivoting away from what the value investing community is saying. I'm not a huge buyer of Intel in this environment. I'd rather have AMD and NVIDIA in my portfolio. Now, if you guys want to see what I mean about AMD and NVIDIA, well, you can get access to at least the AMD video right here, and I'll link the NVIDIA video right here. And so you can access both of them.